Hey, Tim Sykes here. Wanted to make a video lesson on the market's choppiness. Literally was about to start this video a few minutes ago, and then I just wanted to take a closer look at JOBY. Finally breaking out. This is such a great example where this is such a frustrating breakout. I was buying it pre-market. They announced, a $500 million investment from Toyota. You can see the big spike in the news was right here. They make basically flying cars. So now Toyota wants to do some kind of flying car taxi. It's big news. And I really thought that this was going to be better. I did make, $200 on it, but really disappointing. And, INDO, $200. Like, this is the market that we're in. Then I made another 345 on INDO, and then TOP. The only reason why I made 600 is I wanted to give it more time, but I was like, having recognition that this is such a choppy market, and that for me, 2, 3, 400 is the norm lately, just with disappointing trades. So 600, while in another market is puny for my account size and my experience level, this is good. So I'm making this video to just, help you understand that you got to have perspective. And I actually sold TOP at the TOP. Didn't intend on, trading it so perfectly. I actually thought I was selling it way too soon. But this is the market. And if you understand that this market is choppy and tricky, you can take profits more carefully. You can, take losses quicker. You can adapt. That's what trading is. I want you to leave a comment underneath this video. If at any time during this video you understand, say, I will adapt. And that means sizing down your expectations, maybe trading less, maybe paper trading, maybe taking a day or two off, whatever the case may be. Everyone's a little different, but right now, every single play is very choppy. Longs, shorts, like I see a lot of people being frustrated, and that's just a common theme right now. I think, the markets are a little frustrated because normally this is like crash time, and I really expected some market crashing. We have some scary news in the Middle East with all this bombing going on. I really thought we would have more volatility, but the overall market doesn't seem to care. We're right at the highs. So I think the market is a little frustrated itself, where the market should be more volatile. This is the time of year to be more volatile. We have the volatile events, or the volatility inducing events happening, and we're just not getting that much volatility. So kind of recognize what's happening. I'm happy that JOBY finally broke out. Like, I was on the right track buying this here in the high fives, but it also dropped to the low fives. Like, this is the thing. And this is why I wanted to make this video. If you look at my trade, I had such a small position. I was really going to give this time. And then some people are like, why'd you, exit so quickly? I hated the way it was trading. It was, every single penny was like a battle. And I don't care, what my plan is or how patient I want to be. If the price action isn't doing what I want, I get out. I get this question so much. People are like, when do you cut losses? Is there a percentage? This was basically a loss for me. I was wrong that it was going to break out. But just being wrong doesn't mean that you have to take a loss. Okay? I didn't like the action in the high fives. It did break 6. Like, when I was holding it, it did break 6. I think right here for like, a minute? And I was just like, yo, this action sucks. Like, it can't even break the day high. And if you look at my recent videos, on plays like MSS and TBIO, where they similarly had the big spike, little dip buy opportunity and then a double top. So I'm learning from recent plays. And then even, it came all the way down to the 520. So I was dead on right to sell it in the 590s. Then it came all the way back to 615. And then it came all the way back to 560. And now finally, on like, 1, 2, 3, 4, on the 5th try, it finally breaks out. Very, very, very frustrating. So if you're frustrated, if you're losing, it's not you, it's the market. I'm winning, but I'm winning really small, like puny amounts. Like INDO, I sold some after hours yesterday, which was actually pretty good. I'm filming this on a Wednesday. I'll post it on Thursday because I just have a crazy schedule. But again, I wasn't aiming to just make 20 cents a share. Here's INDO. Oh my God, IONQ just keeps going. I'll get to that in a second. It's just frustration after frustration. Let me get rid of API. INDO, this is a play that usually spikes for multiple days. Like if you look at it, I don't need to adjust this. Like right here, there was a first green day and it held its gains and then spiked up bigger. But right here, first green day, second green day. Right here, first green day, okay, you had a little red day, but then second, third, fourth, fifth day were green. So maybe it's just taking a break, but like, the 3 recent times, and even here, you had like a little bit of a spike. 4 recent spikes, I guess you can't really include that, the volume's not much. 3 recent spikes, call it. It all had more follow through. And again, you have this whole situation in the Middle East, and it's literally just not spiking that much. And it's using 410-ish as resistance. So when a play is like about to take out highs, but it doesn't, just especially in this market, sell. I should have sold all in 394, but I wanted to give it time. I held some overnight for what? For just risk and stress and for no purpose. So this is really a common theme in the market. At least there's like a common theme throughout. It might not be the theme that we want, but there is a common theme. So JOBY, frustrating. INDO, frustrating. This was my TOP trade, and this was also a former runner. I was alerting it in the chat room before I bought it, and I was just like, watch this one. And I was buying the breakout. I didn't really want to buy it because it's so choppy, but I was buying this breakout right in here because oftentimes we're getting these midday spikes. I know some of you are just beginning and you're watching my older video lessons or DVDs where I say, don't trade midday. We're in opposite time. Let's not forget, if you watch my recent video lessons and webinars, you know that the old rules don't apply. Why is that? Because there's too many short sellers. So the times I previously didn't want to buy, now this is the time I want to buy because it's where the most shorts are. So I want to be very clear about that. And I know people want this to be an exact science and you want to just listen to, rules I set like 10 years ago, but it's good to learn the rules I set 10 years ago. And then it's good to go against them. Because also 10 years ago, I was a short seller. So some people say, well, I'm not going to watch anything you did 10 years ago because it doesn't apply. It does apply right now, just opposite. And it's so good to know the opposite. It's so good to know why shorts are entering. And so shorts were entering in here, and shorts were getting squeezed on this breakout above 290. And you can see the volume was the strongest. So normally, again, I don't want to buy midday. I don't want to chase. In this example, I was right to buy and I was right to chase. And I was just a little disappointed because, again, it got up to like 310 and it got actually up to 320. And I sold it really well. And the only reason I sold it at 315, that was not my goal. I know I said my goal was to make 5, 10, 15%, but like I'm usually conservative with my goal setting. I really want to make like 20 or 30% on like a giant midday short squeeze. But the only reason I sold was because I knew my profit was bigger than any of my other recent trades. I know some big traders will say, turn off your profit and loss column, let the chart play out. That doesn't apply right now too. Let's not forget those big traders like Tim Grittani and Jack Kellogg are having red months. So again, you have to really be meticulous. That's why I'm making this video. You can't just rely on old rules. You can't rely on, just set standards. You must adapt. Leave that comment underneath this video. I'll give an example after example why I'm adapting. So, the only reason, frankly, that I'm up $1,000 today is because I adapted. JOBY, yes, it's higher now, but it also dropped $1 a share, nearly $1 a share from my entry. So I don't regret getting out at all. INDO, again, I should have sold more into the after hours spike yesterday and not held any overnight, disappointing. And TOP, the profit is there only because I saw the dollar amount and I took it. IONQ, let's get to this one because I gave this one a few chances. I had 2 losses on it, and actually I'll get to DUO too. Example after example after example. It's pretty cool. My biggest play lately was UXIN. And this was because I was completely prepared on Monday for the spike or potential spike. I really encourage you to go back and watch the video lesson I did last Friday on UXIN. In fact, I'll link to it. Let me see before I get to these charts, because it's really about preparation. The only reason I was more aggressive, with my UXIN is because of this video lesson. And I had an inner circle meetup, so I was, teaching students in person. But this from September 29th, okay, this is a 25-minute video, and I go over all the key levels on UXIN. So it's really not a surprise that this was my best trade, probably of the week, but, maybe even of the month, because I was just prepared, and I acted. And I made over $1,000 only because of that preparation, and I knew the key levels ahead of time. So I really encourage you to watch those, previous video lessons. I'll link it below. But getting back to this IONQ, I'll go over IONQ and DUO because they're both good examples. IONQ finally spiking perfectly today from the get-go. And what did I do? I was dip buying it each of the past 2 days when, let me show a 5-day chart. When it topped out at $10 a share here, I was dip buying it in here, no bounce. And I was dip buying it in here, no bounce. And I was just early. Today's action really is funny because this is exactly what I wanted. And it was very frustrating. It was very surprising for me that the stock would, have so much strength at 10 and then even 20%, 25% off. It still, or 20% off, it still couldn't bounce at all. There was no signs of bounce yesterday. And I left it for dead. And now today, you have the perfect run up in a choppy market. So, sometimes you're going to be on the right track. I was on the right track, but, I was just early and I was just wrong. And it was my mistake not to look at it again. Because this one kind of frustrated me. So I didn't want to look at it today. And you can't take these things personally. I took IONQ a little personally because I sold it perfectly with my over the weekend play at 10. So when you sell something perfectly, you feel like you know the stock. I did know the stock at 10, but then I was just wrong, trying to dip by it too early. And it just didn't bounce. This is a small loss too. It's not that big of a deal, but it was just so frustrating because I was like, this has to bounce. And it just didn't. So be careful on bounce plays. Part of the reason why I think these plays aren't necessarily bouncing as much or as quickly as we want, because there's so many shorts. And on the way down, the shorts just aren't scared. They're just profiting all the way down. But then when the momentum flips, it goes up. And then, talking about specifically short squeezes, I think DUO is probably the best example. Obviously, XHG failed completely, but DUO failed completely for short sellers. My last buy was, I should have been focusing on it more, but frankly, it's just scary. This thing is up so much, from, look at it. This was 30 cents a share, and this was just a few days ago. This was 2 weeks ago, and this was, 30, 40 cents a share. So it's up a lot. Just look at the monthly chart here. It was actually, 30, 40 cents a share, call it. 36 cents. So hitting a high of 467 today. And this thing just keeps going much more than, anybody thought that it would. This isn't the only one. Let me show you LX. Did that crack today? Yeah, that's finally cracking. But, LX is another one of these Chinese plays that has squeezed so much from 1.5 to 3. But this is only a double, okay? DUO is 10 to 12 times in just a few days. And they even did a financing. So, I know some of you are like, come on, Tim, get back to the days of shorting. These companies are doing toxic financings. They did a financing right here. Okay. This was yesterday. Let me just zoom in. And everyone was really excited. Look, it's dropping from 350. Look at this financing. They're doing it at $1.55. That's all they can handle is $1.55. And they did this. They raised $2.5 million. They did this when the stock was $3.65. So they couldn't even get $2.65. They couldn't even get $2 a share. They got $1.55. So all the short sellers using Dilution Tracker being like, Dilution Tracker, this stock should drop. And it did on the news initially from 350 down to 240. And even here, 240, 250, 263, 320, 340, 360, 350, this morning, 395. All the shorts are just so angry. They're like, but, Dilution Tracker, but, they did a financing. This is what I need you to understand. There are way too many short sellers right now. They're way too aggressive. It's not a question of if they're going to get squeezed, it's how bad. And DUO is a perfect example. It's not done yet, okay? So if you're looking at like these frustrating stocks, yeah, INDO, Energy Play, there should be up more. TOP, former runner, should be up more. JOBY, Toyota Investment should be up more. Instead, the stuff that's running the most is the junkiest. DUO, which does a financing in the ones. WHLR, which I should talk about too. I mean, this thing is up 110%, and it had a nice short squeeze from 7 to 18, and now it's kind of hanging around here. But you have to understand that the worst of the worst is spiking the most right now. So it's not about Toyota Investments. It's not about energy plays for war. It's junk. It's where are the most short sellers involved in, and how bad will they get squeezed? And I feel for the shorts. I saw several shorts lose 50, 100,000, 500,000. I know a few short sellers who lost, more, and they don't really necessarily want to talk about it. I'm not trying to rub salt in the wounds. I just want you to understand that they exist. Okay? So DUO will 100% surely drop one of these days. It'll crack. Maybe it'll crack like XHG and there'll be no bounce. I don't know if or when that'll happen. But I do know that right now it's in this kind of like the grasp of the short sellers. And shorts, you don't know who has covered for losses. You don't know who's averaging up. They're trying to outlast the squeeze. It's a really tough game. I don't envy them. So, I'm making this video. Yeah, I had a small loss on it, but, small losses are fine on choppy stocks. And XHG could have been terrible. If you ever get too aggressive as a short, DUO helps you wake up. If you ever get too aggressive on a long, then XHG helps you get de-brainwashed. You can never get too aggressive on any of these plays, especially in this market. So, you look at my past 90 days, I'm traveling all around the world and I'm still averaging nearly 1,000 a day. Nothing huge at all. Don't be like, oh my God, you're living the life, Tim, you're crushing it. I'm frustrated just like you, but I'm still finding my ways. I'm taking smaller gains. I'm cutting losses, and I'm staying safe and I'm learning. I really think that's the key. When there's nothing huge going on right now, there's no huge overarching trend, even though, theoretically the market should be more volatile. Energy plays should be up more. Chinese stocks, they're just crazy squeezes. But understand that sometimes the market is like this. So many people freak out. They're like, oh my God, it's over. It's nothing is over. The market just goes through different phases sometimes. This is what I have learned over 25 years now. So perspective is key. There's still opportunities, but I really wouldn't trade as much. I wouldn't trade aggressively, and I wouldn't trade as often. So even I'm making this video for myself because I've been wanting more plays. I've been ready to strike. I want to keep going, but the market doesn't care what you or I want. So we must adapt. Please leave a comment below this video. I want to see these comments, guys. Show me that you're watching these videos. I'm giving you example after example after example. Congrats to some students, though. I highlighted a bunch of students who are taking solid singles on INDO, DUO, CAPR, SGMT, SLXN. So definitely follow me on social media, on Twitter. I'm highlighting them. Ricardo, nice 19% win, 12% win. Fernando has been doing well on INDO. So it's not like nobody's winning. You just have to ratchet down your expectations and take what the market will give you. We'll judge one day at a time, but just be safe. Don't expect too much. Don't be too aggressive. and we'll go from there. So I hope you're staying safe and learning. Keep learning. Learn in frustrating markets, learn in non-frustrating markets. It all adds up over time, and you're better prepared for all market conditions. I'll see you in chat.